Hey guys, welcome back to another week of fundamental analysis. Um, I have made my first week of trading with fundamentals, and we'll go through everything together. But let's have a look at this right now. So this is this week's PowerPoint, 18th of March to the 25th of March. We're going to start with the inflation rates. I've just written a little bit of a summary on what I sort of learnt in the last week. Central banks control monetary policies. Main thing is interest rates to influence inflation. So the higher the high inflations, the higher the interest rates go, leads to more saving, and this will stop or slow down inflation rates. How we measure inflation, the best or the most influential is the CPI, which measures the consumer price index, which measures a basic basket of goods and services, and sees how much that costs every year to year. Okay, so inflation, obviously a higher demand of goods and services, lower supply, results in increased cost of CPI. Hyperinflation is increase in monthly prices over 50% over a period of time, and deflation, which is what's happening with the Bank of Japan for the past couple years, is when there are too many goods and services available, not enough stimulation of the economy, excess service results in a decreased cost, and also, as a result, layoffs and unemployment, lower hourly rates, which can result in recession or depression. So, inflation rates haven't changed from last week. We're still running with February 24 for the US. You can see going down, still above ideal. We want to ideally be at 2%. So that ideal, the aim usually for most economies is at 2%. Same thing with Australia. Note that Australia is quarterly 4.1, going down, but still way double almost the normal the 2%. And again, I live in Australia, so this is the reason why I focus on the Aussie, is because I can, as a citizen in Australia, as someone who lives in Australia and buys things, travels, things like that, I know that we are still struggling. So take a note of that. Pound, again, 4%, we want to hit 2, has gone down, needed to go down. Euro, actually quite good, within their ideal range. And Japan, in terms of inflation, is actually at a healthy inflation, but we sort of can appreciate the fact that their economy, with the interest rates, which funnily enough have increased, but we'll talk about more about the yen a bit later. Interest rates. So this is something I've added from last week. I didn't have this before. Interest rates, we can see, has increased just to curb inflation. You can see for the last 9 months, the the US dollar has not changed. Its interest rate stayed at 5.5, which is the highest rate since 2001. So stubborn inflation still on the US market. Australian market 4.35, still stubborn. No change since November 24. Anything I'd say over 2.5 is pretty high, so we've been high for quite a while now. Same thing with the pound, 5.25, no change since 10 months. So US, USD, AUD, pound, and even euro have all high interest rates. So yeah, economy's not doing too well. And then the yen, where basically this is the first month where it has been not a negative 0.1, but we'll speak more about that a bit later. So moving on into unemployment rates. Unemployment rates ideal is between 3.5 to 4.5. You can see US actually went up. Same thing, hasn't changed from last week. 4.1, 3. So we'll blast through this. We've already spoke about it last week. COT data. So this was last week on the 15th. We were looking at pound, long, shorting yen, still long on oil, gold, and staying on the sidelines for Bitcoin. This week, you can see I'm not touching USD just because its COT data is basically 50-50. Don't touch USD. Aussie does have a strong short bias still. You can see it's it's actually increased in terms of the COT, but economic indicators are quite strong for Aussie. I might change this. I might take this out, just because of the COT data is actually more strong on the short bias. So we'll change this. Yen is still strong bias in shorts, so it's been that for 3 weeks. Out of the indexes, S&P 500, NAS 100 and US 30, you can see it's actually there's a very strong bias on US 30, and NAS has even increased by 4% from 50 to 54, so slightly more bullish. I think with this increase in both NAS and US 30, I'm happy to start longing the Dow. So we're going to put that on our watch list. Oil, gold, silver, we're still strong bias. We're going to keep long with that. And bonds, still strong short bias for bonds. So we didn't trade that, but just to note, I guess the sentiment, people are more safe. More safe. The economy is not booming as much. There's a short bias with the bonds. I'll have to do my more research on T-bonds and understand how it influences the economy and how the economy influences T-bonds, but we'll just keep tracking that for now. So, wrapping that up, not trading the US dollar. Might take this off now just because I want Confluence. Yeah, we'll take Australian off. So, we are going to go take Aussie off, even though, as we see later, it has some good news. US 30's on the watch list, oil, gold, silver's on the watch list, and that's it. So it's literally just one index, 3 commodities that I'm going to be looking at. Last week data, we had good numbers for US, still stagflation from last week, and then good news for the pound. This week was huge, so we had massive list of data. Let's start first with US dollar. So we had dovish news from Powell. We're still expecting 3 rate cuts by this year. Forecast from the FOMC said, you can see interest rates by the end of 24, 0.4%. We're going to trickle down to 3.9% and then 3.1%. So still high interest rates for the US dollar this year. So still a bit of strength in that. Inflation rates 2.4, still not the 2 that we'd want. Then our forecast for 25 is 2.2, and forecast for 2026 is at that ideal 2. So again, because of this, we got stubborn inflation for the rest of the year. We got still high interest rates, but dropping. So that concept of stagflation is still in play, I believe, at least. US dollar, we actually had good unemployment. So we had a revision from unemployment rates, which increased. We had PMI is actually good. So my comment on this USD is still stagflation in place. It's problematic unemployment and still good inflation sort of indicators. I think we're going to just be on the sidelines for the dollar for now, especially with COT data. Australian dollar. So you can see Aussie employment change, very good numbers, plus 70k from expected, right? And then this also got revised from 0.5 to 15k. Unemployment rate went down 0.3. This is the reason why I really wanted to highlight Aussie as a potential trade. It does combat the COT data report. But I like this economic news. I think employment's very important. Personally, I think it's more important than inflation, at least what I've been seeing with my limited knowledge. So Yep, that's on that. Euro, you can see PMI is all down, so not really strong on the euro. Pound, no change in the interest rates on the pound on the monetary policy. Decrease expected CPI. Bullish on retail sales and manufacturing PMI. JPY, Bank of Japan, first time it's been out of the negative. Again, I'm not strong in this. COT data is saying short. I think Jap's still not doing too well, so we're not touching the JPY pair. If anything, we're going to be shorting it. So to wrap up, future weeks. So next week's COT. What's important is probably going to be Aussie. If that CPI is, I'd say, if it's the same as the forecasted, actually that's an increase. Still, consumer price index still increase. So there's still stubborn inflation, right? This will be very key. I just want to know how the dollar's sitting. If it's lower, even though it's bad for the Aussie dollar, I think it's good just because the employment's up. So I'd want to see bad CPI report, like a more negative from the forecast. I actually want to see it around 3.1. I'd like that, and then I might probably start longing odd depending on the next COT data. But for now, let's stay out of it. It's just too risky. We got final GDP quarter for the US dollar and unemployment. So this is going to be a key thing. Unemployment claims, look, it's forecasted more than previous. So again, this is the whole concept of stagflation. If unemployment's actually higher on the forecast, and if PCE is low, again higher, then we have high inflation or sticky inflation and high unemployment. Very interesting next week. So, my take home. We've got dovish news on a longer term for US dollar, but good PMIs. COT data for USD is 50-50, so I'm going to stay out of the trade. Aussie dollar Australian dollar going stronger with the employment/unemployment numbers. A huge difference, not reflected in COT data. So this was my rationale. Still with a big increase in these numbers, AUD is strong and looking to trade against JPY pair. So I believe the Aussie is strong, the yen pair is still weak. I think it's doable to trade this. We might have a look at this. We'll see how it goes. Yen increased interest rate out of the negative for the first time in multiple years, which in theory should be a good thing. However, just noting that interest rate is still 0.1, nowhere near the rates of other currencies. So even though it's still a positive for Japan, it's still a weak currency fundamentally, that's my thesis. I'm still shorting Japan, especially with the COT data. US 30 good trade now with the weakening of the dollar, and then stagflation still good for commodities. So my trading pairs this week is AUD JPY for long, US 30 long, gold, silver, and oil long. Okay, now let's jump on the charts. I'm going to show you a couple trades I took this week. So let me just open up my phone and see what I've actually traded this week. We have traded where is my data? Alright, let's see if I can remember. There we go. So we traded Bitcoin. You can see lost there, just tanked. This could have been a potential trade in this support area, but Bitcoin I'm staying out of. COT data is not good. It's not a real commodity in a sense, or a currency. So yeah, we're staying out of Bitcoin. That was a cheeky loss. Then we had a win. So we actually had a win on pound JPY. Nice little win here, around 5R. And then you can see it tanked back down with bad reporting on the pound and good reporting on the yen pair, according to interest rate wise. So because the pound didn't have strong news and economic data, it's still got high inflation and unemployment. And then we had bad news on the pound and then good news on the yen. We just tanked down. So we are going to stay out of this pair now. That's not something that's tradable. And then the last one I bought was oil, and oil, we had a little position here which we got stopped out of through here. Okay, so oil, I'm not going to chase oil. I've already got another position in currently silver, which we've got this resistance where I loaded up, turned into support, stop loss under this support area, and then we're going to see how this goes. Right, silver can go above this, break that, secure some profits there, and then hopefully we can see it trail up. If not, we're going to get taken out and it might hit this support here. Right, so let's mark that up there just so we know what we're dealing with. Right, that's a nice support as well. So if this fails, I might get in through here. Now let's see what are we actually going to trade, right? So we got this on our watch list, ADJPY. You can see it's got a nice trend up. We had strong dollar, Australian dollar news. We have a very nice resistance here, which could potentially turn support. This might be a potential trade. Again, the key thing is probably going to be on the Wednesday, where we get the CPI news for Australian dollar. If it stays forecasted at 3.5, I still think it's bullish. I'd go in the dollar for sure. Aussie dollar. US 30, same sort of setup. Nice resistance that could potentially turn into a support. So we're going to keep our eyes on that. And you can see with US 30, still uptrend, right? So good bias. Gold, the reason why I wouldn't take a trade on gold right now is just because it's been choppy around this support area. I would have liked it to shoot up, make something, maybe touch this resistance turn support, but because it's touched this area multiple times, I'm not going to really focus on it. I'll still have a look at it, but yeah, not a fan right now of gold's technicals at least. Fundamentally good though. Fundamentally silver's good as well. Hopefully this is a good trade, but we'll see how it goes. And then oil's sort of like gold where it's chopping. Look, it's touched 3 times ish now. I don't feel confident in this zone unless it pushes up, and then we could potentially get a retest somewhere here. So yeah, thanks for tuning in, guys. That's another week of fundamentals done. I'll catch you on the next week.